Everyone. Unblocked is a bi-monthly event series where guests are asked questions in an AMA-style format, focusing on questions relevant to early-stage startups and blockchain technology. Unblocked is sponsored by DLab, a startup accelerator and venture studio that sits within the SOSV family. You can find out more at www.dlab.vc. We hope you enjoy the conversation. Today's guest on Unblocked is Dan Tapiero, is the CEO and managing partner of 10T, which is an investment firm that invests in mid to late stage crypto companies. Dan, welcome.
Glad to be here, Paul.
So can we, you've had a long history on Wall Street and as a macro investor, and it'd be great to learn a little bit about sort of your background and your history on Wall Street and how that led you to crypto and blockchain.
Sure. Yeah, I was 25 years in the global macro hedge fund business. Started my career early on at Tiger Management. Was in the global macro group there. As you know, that was Julian Robertson's firm. At the time, focused on currencies, bonds, commodities, emerging markets, not specific companies. It was a very exciting time. I was hired really young to be the guy, the European bond and currency, I would say, trader, but also analyst. And at the time, you probably don't remember this, but there was an ERM crisis going on, the exchange rate mechanism. Many of these currencies in Europe were trying to figure out at what rate to peg against the D-mark, and then that would eventually float into the euro, which was launched only in 2000. So it was a super macro time, incredible time to learn devaluations. The pound devalued in 92, but then you had the peseta and the lira. And so I was this 23-year-old guy coming in at 3 a.m., sort of at the forefront, of tremendous financial macro developments. And of course working for one of the greatest investors of all time, so who had tremendous risk appetite on top of that. So it was a very interesting time. Then eventually made my way to Steinhardt Partners. Was the head of macro strategy at Steinhardt Management. Steinhardt, again, was someone who was sort of in the league of Julian and George Soros, usually considered sort of the third guy. Active in macro, more of an equity person, but was very focused on some specific things happening in Japan when I worked with Michael. Then made my way eventually to work with Steve Cohen at SAC Capital, and I was with Steve for 10 years. I ran global macro there for a time. I had my own portfolio throughout. Actually sat right next to Steve for 3, 4, 5 years, it felt like, right there on the trading floor. At one point, we traded a very large portfolio together. I was his, I would say, macro advisor for his account, but also for, the fund overall. I also was the first person that he allowed to raise outside money. So I raised outside money that was in an entity called DTAP Capital that was run pari passu with my SAC money. I left Steve in 06 to work with Stan Druckenmiller at Duquesne. Stan had, obviously a legend in the macro business, and an opportunity opened up to work with him. Worked with Stan for a bit, but eventually made my way back to Steve, who I'm still, very friendly with. And worked with Steve again from roughly 09 till 2012, and then stopped and retired from the money management business. I had a little bit of a different experience, not just as I'd say a straight hedge fund manager, because I started 2 businesses along the way. When I was working with Druckenmiller in 06, I was very focused on agriculture and grains, and he and I had a very large position in grain futures at the time. And, my process has always been super research focused. And, behind my bigger ideas, there are always these 30, 40-page, 50-page investment memos. And I've always had between 4 and 8 research analysts. And so, we came up with this investment memo for this coming bull market in agriculture. And I remember Stan coming into me saying, look, I love the thesis. This is a great idea. How else can we apply it? And I came up with this idea that US farmland prices could double in the coming 5 years. And so we launched a company in partnership with the Goldman Sachs partners called AgCoa, which 7 years later became the largest private farmland REIT in the US, and ended up selling that business to the Canadian pension fund system for $450 million in 2013. So again, a traditional portfolio manager, but turned the macro idea into founding a business. I did the same thing again in 08, 09. I launched a physical gold business, a sales and storage company with my co-founder, an ex-Goldman Sachs partner, who today is still the CEO. 10, 11 years later, we're the third largest vaulter of gold in the world outside of the banking system. We have 10 or 11 business lines, over 300,000 clients. We've done over 1 million trades on the platform, and we just had a record year. So, that's been fantastic. It was through that business that I learned about Bitcoin, because in 2014, that gold business, GBI, integrated with a company called BitReserve. And BitReserve today is the Uphold wallet. And so we were the first place where you could buy and sell physical gold to buy and sell Bitcoin and Ripple. And, at the time, Bitcoin, the market value was kind of small. Ripple was even smaller. And I was interested in it. And we'd spent a year integrating with them, and cost us $1 million. And, and I was like, yeah, this is cool, but it was still too small. And as a macro guy used to being involved in markets that are like $1 trillion markets, it was like more of a technologist kind of, play thing. It wasn't, to me, like a real investment asset yet. But in 2018, late in 18 and then in 19, that business integrated with another firm called Equity Trust. And we were the second place in the US where you could buy crypto in your IRA. And so that's a great business, because, as an owner of that, you can charge 3, 4, 5% percentage points or whatever it is to clients, because they're not paying taxes on their crypto trading. They're not going to pay anything until they're 65, right? And so for an asset that's moving, 10% in a day, who cares what the fees are? So that kind of pulled me in again. Yeah, that kind of pulled me in again. And it was at the same time that Bitcoin, had hit 18, 19,000 in early 18, and then dropped down 85%. And as a macro guy, when an asset is in a bubble phase and has a blow off, that's the time to make a decision about whether it's going to zero, which some people at the time still thought, or whether it's a buying opportunity. And so I started buying Bitcoin in my own entity, DTAP Capital, and I've just bought it and held. And I think, hodling, as they say in the space, is really the only way for, I think, people to hold Bitcoin. I think trading Bitcoin is really only for super professional people. I don't do it. I think it's something you have to do 24/7. So that was sort of my introduction and my movement from that traditional macro background, etc., into the Bitcoin world. Also understand that as a gold guy, you come from a bit of a hard money mentality, right? Gold is limited in supply, and as we know, Bitcoin is a fixed supply. And so it's not that far a leap, right? From if you're looking at this from a traditional lens, to think that there's some validity behind this thing.
Do you think, the analogy to digital, gold and Bitcoin, tons of people have made that analogy and say that Bitcoin's an improvement over gold. Does Bitcoin eat the use case for gold over the long term?
Yeah, I mean, look, it's a great question. I think no, because I think that, frankly, the Bitcoin and the Bitcoin network and all the various blockchains and the entire what I call digital asset ecosystem that is growing up around Bitcoin, as what my friend Raoul Powell calls the pristine collateral of the system, that's just a lot more than gold. I mean, gold is a fantastic hedge in a traditional portfolio. I think that with bonds yielding less than 1% around the world, that if you think about traditional fund managers who have a weighting of 70% equity, 30 bonds, or 60/40, that the big chunk of people's portfolios basically are not really functioning anymore. From 1981 till now, if you'd owned this 60/40 portfolio, you've done brilliantly. It's been fantastic. Every time there's been a slowdown, your bonds have offset your losses from the asset side of your portfolio or your equities. Now you're looking at 2-year notes at 20 basis points or whatever it is, and there's nowhere to go and there's no yield. And if we have a slowdown or things, are a little bumpy for equity, your bonds are not going to offset the losses or let's say, the non-gains in your equity side of your portfolio. I think in that instance, gold is an excellent hedge and in some way a replacement of some part of those bonds. Because if you do have a period where there is a wobble, authorities come in, they have to, add more liquidity. Gold can go up 20, 30, 40% in a year. I mean, and if it only goes up 5 or 10%, that's offsetting sort of, that's performing a bond type function. Now, there are a lot of other great reasons to own gold, but, like in my mind, that's its specific function in a portfolio. You should have 5 to 10% in gold. Bitcoin, the invention of Bitcoin, the brilliance of the Satoshi white paper, and all of the genius things that are going on in that space, that's a lot more than just a hedge. And I think eventually, if you talk about value of the entire ecosystem, and by that I mean the value of Bitcoin, all the other cryptocurrencies, and all the equity, the value of all the equity of the companies in the space, number is at around 2 trillion today. To me, that feels really low, given what this world is. And so just to say that Bitcoin is a store of value, a replacement of gold, probably, for the younger generation, guys under 35 or 40, they don't see what the value is. But I mean, I don't know if you really want to get into gold, because that is something I can talk about. And
no,
its long-term use case, and why it's important and why it's not going away. I mean, but I don't think that's for this audience.
Yeah, no, I was just asking because it's something you hear about all the time. And
Absolutely.
I think Paul Tudor Jones said, I believe it was him that said, a bet like gold, or even a bet on, 10-year treasury, if you're going to hold it because you think interest rates are going to go negative because the entire global financial system is going to go haywire. That's kind of a bet on the world being set on fire. Whereas with blockchain and cryptocurrencies is actually a bet on human ingenuity. So they're all actually kind of different bets, I guess. And I think that's what you're kind of saying.
Well, a little bit, not exactly though, because, I don't have gold because I'm worried about, the end of days or some cataclysmic situation. I think gold benefits in periods where liquidity needs to be added to support the traditional system. It's not exactly the same. I mean, gold in the last few years has done tremendously well in the last 3, 4, 5 years, and the stock market is at a high. You see what I'm saying? So
Yep.
It can benefit in many different scenarios. But it also does, you're right, act as a hedge to, the end of days.
Yeah. I'll sidebar, and then we'll get back on track. But I'll never forget at Morgan Stanley. I was at private wealth management, and I had a call from a client. They wanted to sell their entire portfolio and put it into gold coins, and because they thought the world was going to end. And I just thought that was just, anyway, sidebar. But anyway, it's just kind of funny.
So you experienced that firsthand, and my guess is you weren't able to buy him the gold coins because Morgan Stanley doesn't offer that.
Yeah, that, and also I was like, well, if we're going to get to that point, my argument is like, well, you're going to need a little bit more than gold coins. Like, oh, no, don't worry. I'm buying a farm and I'm taking gun lessons. I'm like, okay.
When was that? Was that in October of 2008?
No. It was geez, 4 years ago. It was right when
Really?
Trump was elected. Yeah.
Very interesting.
Yeah. Anyway, um, but your experience as a gold investor, I guess, helped you see the use case for blockchain and Bitcoin and cryptocurrencies. Are there any other sort of tailwinds that you witness, like within the financial sector, like the degradation of trust, for example, or anything like that, that you think act as
Oh,
tailwinds to the technology?
oh yeah. I mean, we could talk about this for a long time. I mean, look, I think Bitcoin and the impetus for its invention, as explained in the Satoshi white paper, was definitely the crisis in 08, 09, because that was a time that it was very clear that the authorities bailed out certain, uh, players in the marketplace that really didn't deserve to be bailed out. And look, I'm part of that old traditional world. Again, I was in the hedge fund side of the business. No one ever bailed me out when I had a negative year, and a lot of these guys got bailed out. And I think it was very clear to people, not just in that world, but the general populace, that that was unfair. And to me, that sense of unfairness and led people, and I think there are a group of cryptographers and mathematicians, and I don't even I think got together basically and came up with the idea for Bitcoin. Again, if, as you know, there's 30 years of scientific and cryptographic research that went into solving the Byzantine generals problem. It's not, it was not something that happened overnight. People say, well, who is this Satoshi person? It doesn't matter. It frankly couldn't have been, it had to have only been one of like 10 people, because the degree of complexity, that went into writing that paper is so great that you didn't just come up with this overnight. And so, we know that there are, what is it, 8 or 10 footnotes in the paper. Wouldn't surprise me if some of those footnoted guys actually got together and wrote the paper. Again, we don't know. But I think that that paper was born out of the '08 crisis. And interestingly, and again, so I think that was the start of the beginning in the degradation of trust, as you say, um, that led to people believing in the importance of a decentralized network and the importance of a decentralized, broader, even decentralized computing framework, right? Which would, because, this, in my mind, is sort of the next step. They call it what, Web 3.0, right? We're going to move away from, a place where Google and Facebook know every single thing about you, and where information is centralized, right? Those are centralized actors who control, they don't control the network of information, but they do a lot to control it. And
Well,
so,
I
yeah.
guess going along that theme, you could argue that in the mid '90s into the early 2000s, and even now, a lot of the companies in the TNT space didn't fully grasp the sort of the effect that the internet would have on their business. Do you feel like we're at that same point with the financial system, that
All
they're not
right. So
fully
what? Yeah, go. I'm
with,
sorry.
with like just like finance
Yeah,
and
100%. I mean,
yeah.
it feels very, very similar. And there's a chart that I refer to, and I think it's even on our webpage for my private equity fund, which is 10tfund.com. We put a chart there that says we think that it's the equivalent of 1996 in terms of where the growth of the digital asset ecosystem is vis-a-vis the growth and development of the internet. And we say that, and it's really simple, because in 96, 1% of the world had internet access. And today, around 1, maybe 2% of the world have crypto accounts or crypto wallets. And so over the next 10 years, the internet adoption rate increased by 15 times, right? And so I think this digital asset ecosystem, can increase in size, and that would be saying that we could go from 2 trillion market, value now to something like 30 trillion. And I know that's totally crazy if you know, make that kind of projection publicly. People, but I really, I do think that this is sort of the value protocol for the internet, that we were birthed, or the internet came to us, and it was for exchanging information and email, but there was never a security protocol for the exchange of value connected to it. And that's why a guy like me in the mid 90s, I was like, oh, I'll never put my credit card number on the internet. Oh, that's crazy, right?
Yeah.
I mean, literally crazy. And that was normal. Now we don't think twice about it, but the security apparatus did not come along with that. And so I think that the Bitcoin network is that, and the Bitcoin network and the blockchain technology, and that drives the mechanism of the Bitcoin network. Again, I think that is the the security layer, or I would call it the security protocol for the whole, for the
Do you
internet
think?
as we know it now. I mean, does that make any sense, or
No,
is this just a macro guy?
no, I mean, it makes sense for me. And as someone who came from the financial industry, and I already entered with some mistrust of how the industry sort of operated. So I guess I was sort of primed to fall into blockchain, I guess. But do you feel like these firms, they're white shoe firms, they've been around hundreds of years. Do you think they'll be able to adapt, or do you think ultimately, over a long enough time scale, it's going to be like what happened with a lot of these media and telecom companies?
Well, I think some will adapt and morph. I mean, Morgan Stanley, I think just a few days ago, bought BitHum, the Korean cryptocurrency exchange. I'm actually not sure why they did that. Maybe it'll come
Yeah.
out eventually.
They also bought E-Trade, which I thought was also sidebar, but also thought was bizarre because it kind of cannibalizes their own private wealth management business. But anyway,
Well, they're different,
irrespective.
but no, those are probably different clients, is what they thought. The unfortunate thing, I think, for Morgan Stanley, when they bought E-Trade, which is what, 2 years ago or whatever it was, they paid $13 billion. And at the time, I remember seeing that. And again, I was more in this world, and I thought, my goodness, they could have bought Coinbase for 6-7 billion. Why would you spend 13 on E-Trade? It just showed that they were not really, I mean, they were behind by a few years. And now, of course, Coinbase is who knows what, 50, 80 billion, 100, I don't know. And BitHum, again, there are other Korean exchanges that we know. Not sure exactly why BitHum, but I'm sure that'll come out. I guess what I'm saying is that some will adapt, others won't. But what's happened is that the people indigenous to the space currently have a massive lead and a massive jump, and I don't see a way for them to organically just sort of grow up and to become a competitor. They will have to buy some of the larger, more successful companies in the space if they want to survive, number one. Number two, there are a lot of clients, high net worth clients at these wealth managers who really want to own Bitcoin and want just to call their broker up and say, hey, can you buy me that Bitcoin? Or can you buy me, I don't know, maybe they're more adventuresome. They're like, hey, can you buy me some Polkadot? And the answer is no. And so I think very soon all the wealth managers, and I'm waiting for Merrill Lynch Wealth Management especially, to turn the light bulb on, because a company like Merrill, as you know, I don't even know, $4 trillion in assets, 15,000 FAs. Again, my gold company is plugged into them. So I know some more details about that wealth management firm. If you see a light bulb go on there, there's going to be a stampede coming. And I think it's coming. I do think it's coming. So
Yeah, I would agree, because then you can start selling structured products on these sort of things, and et cetera, et cetera, et cetera, to these retail investors. So I think at that point, I agree with you. I think the floodgates would open. What do you think people miss about blockchain today? Um,
But
is it just,
which people?
well, like people in the financial world, right? You're seeing more and more, legendary investors accept it. Paul Tudor Jones, Stanley Druckenmiller's talked about it, but in general, there seems to have been a bit of a hesitant move into that industry. Is it because they view it as competitive, or were they worried about sort of that $0 bear case where this thing could go to zero? So why allocate time and money? Or
I think it's really more simple than that. It's just the complexity, and I don't, you know, there are very few people in the traditional financial world, certainly money managers, who could read, let's say, the white paper and understand it. I mean, very, very, very few. And the hurdle in terms of the amount of work that you need to do to get comfortable with the fact that I think Bitcoin is an invention akin to the invention of the combustion engine or the discovery of electricity. I mean, I really think it's something that big, and to get to that place takes a huge amount of work. Took me not only 5 years of knowing about it, but then it took me 6 months of about 10 hours a day of falling down that rabbit hole, as everyone in the space, says, reading hundreds of papers, getting on Twitter, getting immersed in the community, asking questions, listening to hundreds of podcasts. It's not easy, okay? And for an older guy, older guys, 50s and 60s, we just were not, we're not native technologists. And so the people who should have understood this really early, the Silicon Valley technology people, they weren't as early as you think they should have been, because it's very macro and it's cryptocurrency, and technologists don't really understand macro or currency, or very few of them do, and macro guys don't really understand technology. And so it was this hole for a while where you just had, you know people who were, you know who were just, I mean, I was going to say the cryptographic community, but that's so small, and, some libertarian type people are drawn to it. But look, just think about how interdisciplinary this thing is. Computer programming, knowledge of history, of economics, of game theory, of math. I mean, it's just too much, and it's a whole new field. It's like an emerging asset class, never existed before, and all of a sudden, it sort of grew for 5 years in a very small way, in a very fringe way. And now I think finally in the last year or so, um, more traditional people with enormous resources, okay, have said, okay, I get something is real here. Let me put my 20 best analysts on this and have them figure it out. And you mentioned Paul Tudor Jones. He wrote himself with his analysts an 8-page paper last summer explaining why he took a position in Bitcoin. And again, he sees it more as a hedge to inflation and the increase in the money supply post COVID. He's maybe not yet in the worldview that it's as big as something as I see. Maybe he is now. I don't know. But then you have people like Massachusetts Mutual, which is a very conservative insurance company, come and take $100 million position in Bitcoin. And then you have Boney and Northern Trust, beginning to act as custodians. Those are the shocking things. I'm not shocked that Elon Musk or Michael Saylor, those guys are cutting edge tech guys. Jack Dorsey, of course, they're going to own the Bitcoin first, right? The shocking thing is that some of these more traditional guys are seeing the value, right? And I think that's why we're at a moment of like escape velocity actually for the entire space right now.
So you mentioned, new asset class, and I'm actually just curious, in your investment career, how many times has a new asset class come up?
Yeah, not a lot. We have another page again on our landing page is another chart that shows you the ABS market from its early days in the early 80s. To me, I think Bitcoin is much more, and blockchain, much more important to the world than, let's say, the development of the mortgage market was. But it feels to me like early 80s, mid 80s in the mortgage backed security market. And so if you look on our landing page again, I think in the first 10 years, the ABS market had a 65% CAGR. So imagine that, it's tremendous. And then in the following 10 years, it continued to have a 20% CAGR. And you're talking about a market, into the trillions, right? And still growing at massive growth rates. And so I sort of see us, it's like that. Another example would be, when the wall came down in the early 90s in Eastern European and Russian assets, you had Russian assets that were sold for $1, that went to being worth billions and billions. That's sort of, the end of communism, the beginning of sort of more widespread capitalism. It's one of those. So it's something to that degree. But, frankly, remember the SWIFT payment system is pre-internet. Okay. There's no way that a 1950s technology or whatever it was, 1940s, 50s, is going to be the way for the future. Certainly not the next 10 years. So, in terms of the history of money, rather than like a macro geopolitical development like Russia, the history of money, I mean, I can't think, maybe the dollar going off the gold peg in 71, Nixon pulling us off the gold standard, maybe that was the last most important, or you could argue, I guess, the foundation, the development of the euro. But again, the euro is regional. That was one place. So
And
doesn't
the
go
euro
around
has, I
too
mean,
often.
I tend to believe the euro has a uncertain future. But maybe you
I don't know.
disagree. I
I
don't know.
think that's a hard bet. I mean, many people, old time macro guys, have thought that for 20 years,
Yeah, yeah,
uh,
yeah.
actually even longer. And I understand what are some of the structural inconsistencies that hold the euro together. However, uh, Europe is wealthy enough, and they're very political, organized societies, uh, and they're big enough to make sure that there's no issue with the euro.
Yeah, yeah. That's interesting. I guess do you think we're still in the concept phase of blockchain technology, where a lot of people seem to think that we've entered the sort of adoption phase? And I'm curious as to where you think we are on that
Oh
spectrum.
no, we're in the adoption. I mean, this is still early. This is still early. Um, Even take a look at something like NFTs. A month or 2 months ago, NFTs were nothing. I mean, they're not even on anyone's radar. Again, Pomp, who you probably follow on Twitter, Andy Pompliano, last summer wrote a great piece in his daily that I think people should subscribe to. It's a great daily newsletter. He said, "Oh, NFTs are the next big thing," and he bought an NFT. Um, like this just started. Someone just paid $70 million, Singaporean guy, for this Beeple piece. You could argue like that's the first batter of the first inning of the NFTs as a use case. Like, and that's just one tiny little subsector. You talked before about structured product coming off of Morgan Stanley. I think about yield. The yield in the DAE, digital asset ecosystem, the yield that you can get on stable coins. or on your crypto is insane. It's crazy. 5,
Yeah,
6, 7%. Forget
much better
about
than
even
you can get.
talking
Yeah,
about, right. Forget even about talking about like the entire DeFi world and the yields that you can earn in that world. Um, you know, the yield phase, uh, it just started. I mean, BlockFi, which is along with Celsius kind of leading the charge here, 18 months ago was a $50 million company, and they just closed around at 3.2 billion. But 18 months ago, this was zero. Like there was no world here. So how early are we? I mean, it is early.
yeah. What you first when since you first entered the industry, and let's say 5 years ago, whenever you first started looking at blockchain, what views have you said have changed, or what would you say is, or what would you say has been enhanced?
Yeah, the most important thing that's changed is that up until I would say a year and a half ago, okay, up until, yeah, about a year and a half ago, there were quite a few people, even within the space, who thought potentially Bitcoin could still go to zero. And I think now that bottom end of the tail there has just been that's been taken away. And I think that's important. I'll never forget reading the Wall Street Journal, Dan Moorhead, who runs Pantera, who worked at Tiger after me, who I've known for 25 years, great macro thinker. Started the first venture capital firm in the space, Pantera. Never forget, he'd made a fortune in 2017 on the ICO boom and all the huge move in Bitcoin from basically 1,000 up to 18,000 that year. Never forget, in January or maybe February of 18, he said, even he who had benefited so much said, Bitcoin, it's still a speculation and could go to zero. And that was one of the most interesting things I thought, because I was thinking, when I read that in the latter part of 18, I started to think, it's actually impossible for Bitcoin to go to zero. And so the fact that someone who was so prominent, so smart, had benefited so much, just told you that that idea was still out there, okay, even amongst the smartest, best guys in the space. I think now that's gone. And so that changes a lot about people's mentality about how they execute to the space.
Yeah,
Um,
I tend to agree. Every year that goes by, if it was like the first year, it's like, okay, fine, maybe it's a gimmick. Second year, okay, but year 11, year 12, every year that goes by, it's just I find it hard to believe that it's just going to disappear. Right, the genie's out
well,
of the bottle.
I mean, you look at the proof of work algorithms success, the hash rate is mind boggling. What people, in a good way, people don't understand that what the Bitcoin mechanism, what Bitcoin is about turning electricity from the analog world into security in the digital world, right? And that's a tremendously powerful function. And again, maybe you have to be more of an abstract thinker to get that. I don't know. It seems pretty straightforward to me that security on the internet, true security, uh, is probably the most important development, technological, financial development of our time. I mean, what is more important than that? And it's secured by, the hash rate and of course the proof of work algorithm that drives that. So, to me, it's like, uh, look, it takes a lot of work to get your head around it. And Jan Pritzker wrote a book called Inventing Bitcoin, which was very helpful to me in my early stages. Jan is an absolute genius, works with the Swan Bitcoin people now. Also, Safadine Amos's book, The Bitcoin Standard, very important for understanding Bitcoin as a store of value. those two books, and of course Andreas Antonopoulos's books, also very important. The Internet of Money, Volume 2, very important. Just for people who are listening, it takes a lot of work, right? Period, to get to a place where you have your light bulb and you see like, holy cow, this is really huge.
Yeah. Well, do you think like the store of value use case is kind of an overused, because like if you could, I guess I was listening to a podcast and the point someone was bringing up was the fact that if, blockchain was a person and you could ask them what role they wanted to be in an economy, you would always say you wanted to be a store of value, right?
Yeah, store of value is a very limiting narrative that certain people in the space push because it's easy for other people to understand. And Bitcoin is a lot more than just a store of value. So, and the guys who push it have their own agendas, and some of them are actually anti-gold for some reason. They're not financial people. They're not portfolio managers who've worked with proper investors. They're business people who are pushing a meme, a theme, a narrative, and it's easy to say, oh, Bitcoin is a new form of gold. Okay. That way, your brain doesn't have to work. You don't have to turn it on to really understand what Bitcoin is. You can just say, oh, yeah, I get it. Digital gold. Okay, whatever. That's one aspect of it. But I think the people out there who own some of the larger firms, especially in the space, they need to sell their product, or they need to, increase the revenue of their firm. And they think it's easy to get to a wider spread adoption by putting it in that framework. I think they're doing the community a disservice, to be honest. I understand the mental model that they're using. Trust me, I really understand it. But I think that they're doing a disservice. I don't particularly mind, because that just means it'll just take longer for people. People don't like doing work, right? It's easy to fall down on that mental model and say, okay, that's it. And so it'll take longer for people to really get to that place where they really understand it. And that's the only thing that can really drive true conviction.
Yeah. Yeah. No, that makes sense to me. With the last couple of minutes, I wanted to switch to your fund, and how I understand it is your fund structured like a private equity vehicle, and you're investing in mid to late stage crypto companies, I believe, with the valuation of 500 million plus. Why did you decide to go to that route? Did you just see the space and see like, wow, there's a shit ton of early stage VCs, I can't possibly compete. There seems to be, quite frankly, I don't even know if I know of any, later stage private equity firm or any private equity firm investing specifically in crypto. So would be curious to hear your thoughts.
Yeah. No, partially you're right. I saw, well, first of all, I'm not a technologist, and I'm not like, I'm not really sort of interested in the micro. Again, I've been a macro investor my whole life, very top down. So instinctively, I was actually looking for a fund to invest in. This was for myself, to give me a broader, sort of more de-risked exposure to the space. But as you mentioned, there are a lot of VCs, and Andreessen and Polychain and Paradigm and Parafy. These guys are all geniuses. I'm not. There's no way I could compete with them, nor could I convince any investor that I knew anything more or could do anything better than them. I would put money into them ahead of myself if I were interested in the early stage. So I was really looking around for a broader macro bet, a bet that was an investment that I could hold for, 5, 10 years, potentially longer, that was, as we discussed before, owning the blue chip companies circa 96, the eBay, Amazon, Yahoo of the time. And, again, that fell very naturally to me, to build a portfolio of 10 to 15 of these more established names. And these businesses, they have great leadership teams, hundreds of millions of dollars of revenue in some cases, established moats. They've already figured out how to win. And in my mind, I'm sort of owning like the Dow Jones of the crypto world of the next 10 years. Like 10 years from now, these guys would be in a blue chip index in a way. And that's kind of how I place my bets. They're macro bets. It also has a very different volatility characteristic. I mean, Bitcoin, I don't know whether this portfolio will underperform or outperform Bitcoin. I don't even really care, to be honest. I mean, I just think I want to have a portfolio of companies that's diversified by area. We break down the whole world into three buckets: digital asset ecosystem gateways, next generation financial services companies, and then blockchain infrastructure companies. And we are going to have 3 to 5, companies in each space. And I figure for me and the exposure that I want and my LPs, that sort of covers things. Also, remember, my investors are guys from my background and my age. And so if I go into them and say, yeah, we're going to be flipping stuff around for MetaMask. And I mean, if I even say the word proof of work, the phrase proof of work algorithm, I've lost all of them, right? Some of them have touched on Bitcoin. Some of them maybe that no one understands Ethereum. I mean, programmable money, even as a concept, is nearly impossible for a traditional portfolio manager to understand. Like, you can explain it, but in our mind, it kind of doesn't make sense unless you really, again, throw yourself into it and see how it works. So, not only was it the kind of exposure I wanted for myself, it was an easy way for me to explain to other people like me who want to dip a toe into the space, hey, this is a private equity fund, just like all the other private equity funds you own. There's an income statement, a balance sheet. They have 7 years of track record, hundreds or tens to 50 to hundreds of revenue, a leadership team that can pivot, really down the fairway stuff. And these are companies that, as the broad digital asset ecosystem grows in value, that benefit. And as a perfect example, I mentioned before, NFTs were nothing 2 months ago. We have a business we're looking at that all of a sudden is perfectly positioned to benefit from the increase in value of this space. Now, we wouldn't have known this a year ago, right? So we want to own the companies that can move and pivot to the areas that develop. And that's the thing. I don't like things, as you know, are moving so fast and the growth is so quick. There's no way you're going to be able to, follow the right path. But if you're invested in, the 10 or 15 businesses and teams and people, those guys are in the weeds. They've figured it out. They're seeing it on the ground level, and they have the expertise. And I'm willing to make a diversified bet on sort of what I would call almost, or what I think are budding conglomerates.
I see. I get, so you can apply like a DCF model to a company like Coinbase or something like that. And, I've been listening to a lot of other, investors in the space that say you can apply more traditional type investment models to various protocols, particularly DeFi protocols. I'm curious if you've thought about that at all.
Yeah, I mean, we have, of course, and we've made 2 investments already, and we've written 50-page investment memos behind them. And those memos are an explanation for why we see the value of the company going up, 5, 10x or whatever it is. And half of that type of work is what I call macro valuation, which is sort of my specialty, which is coming up with creative ways to look at the future, coming up with scenarios, and then figuring out how that company would benefit from certain macro scenarios. Okay. Then the other half is that traditional bottom up, as you mentioned, DCF, some of the parts valuation, all the different sort of corporate finance, traditional banking ways we look at as much as possible. And one of the partners in the GP, was a banker at Morgan Stanley and and has that kind of background. And one of our analysts has a very strong corporate finance background. But for me, all that stuff is great and nice. But if I can't come up with a macro view, a world view that I believe in, that I believe will power this company forward, I really can't make the investment. And again, I did that before in the agriculture space. I've done it in the physical gold space. So it's something that comes very naturally to me. And we
Mhm.
explain it in these investment memos we write. We explain our methodology. So I think that's one of the reasons why, as you say, you can't think of another person. It's because the growth equity investors are not usually macro focused. They're not usually, you know, involved with currency, certainly not cryptocurrency. And so I think they're all coming, and you do see one-off checks written by, the brilliant guys in the space like Tiger or Kotu. They'll write, they all participated, I think, in the Coinbase round. And you're seeing it now, just now, companies that invested in the seed and A, doing their pro rata in the B and C rounds that are happening. So as companies are growing, they're growing with them. But there's no one else that I know of that only does this. But my guess is, again, the space is growing, lots of money to be made, lots of interesting things happening, and it's the future. So I presume, we'll have
Yeah.
company pretty soon.
No, that's great, and I know you have to go, but my last question would be, how could we be helpful as a community, or anybody who's listening? How could we be helpful to you?
Well, I need a few smart research analysts. I need a few more guys to add to my team. That would be great if there were some smart younger guys with a varied background. And again, I seem to be looking for, of course, I can't hire anyone that doesn't own Bitcoin personally or hasn't fallen down the rabbit hole, because it takes too long to explain everything to them. But it's like I'm almost interested in hiring people who are hobbyists it's sort of in the true sense of the word, because they're traditional. They also have to have a traditional background and understand, either corporate finance or private equity or macro investing. They have to have some of that background, but the people, they're more hobbyists, right, from the traditional world, because there are very few people uh, in the space still. I find very
Yeah,
few.
yeah,
So
totally agree.
anyway,
I know you have to go, so thank you for your time today. It was a
yeah,
pleasure
this was
speaking.
great, Paul.